Yeah, hello and welcome back to the channel. This is again business taxation, and we have a last remark to make. That is, I need to show you some basic background why there is sometimes an option to opt in or out of corporation tax. If you are a capital company or a partnership, sometimes the state grants you to opt into corporation tax, although you are a partnership, or to opt for income taxation, um, although you are a company. So why is that the case? Well, the explanation is evidently that there might be problems for neutrality of competition between the different legal forms, which even remain after you decided to set up a corporation tax system which wants to mitigate the problems. Well, the aim which you have when you set up or decide for your corporation tax system is usually to create comparable conditions for the different legal forms so that all the legal forms, sole trader, partnership, and company, are at least still attractive so that the tax burden does not deviate too much. So to treat them as much as you can in a way which is alike. Now, sometimes differences remain, although you try to do your very best. Or it might even be that you try to do your very best, but you do not achieve the very best, and in the end create new differences between the legal forms after you removed other ones. So it might be that you just shift the problem to another area. For example, in the present German corporation tax system, I told you already that the tax on the two levels, company and shareholder, together is meant to approximately be equal to the total tax burden of a sole trader. So you have the sole trader's burden here on the left, let's say 40%. And this is meant to equal the corporation tax on the corporation level plus the income tax of the shareholder. So as we see it here, we have equality. But, ladies and gentlemen, if we go a bit further, we have even a kind of inequality. Why? Because in that constellation, we must see that the second half of the tax burden for the company only becomes due when the profit is distributed to that shareholder. So during the time when the profit is retained in the company and not reinvested, so not distributed, then the company has a huge advantage. Here you see, if you do not withdraw or distribute the profits, then you see here on the right side, the company is far better off because the second half of the total tax burden has not yet occurred. And the question is, when will it come? As long as we want to reinvest the money, that second half never comes. So there is a considerable inequality of the tax burden, although in theory only temporarily. But temporary can, in this constellation, last for a very, very long time. And so it was not surprising that after a while, the representatives of professional associations formed by partnerships and sole traderships complained a bit to the fiscal authorities, well, and to the legislator. Um, Here is an inbuilt distortion of competition. Now you did your very best for the companies. Now we have the disadvantages. Please take care of our problems now and try to make things comparable again. What did the German legislator do? Well, you could then just take a drastic step and say we change our corporation tax system back. That's not recommendable. Or you could say, okay, then we need to find a solution for the sole proprietors and the partners, which mirrors a bit of the tax situation of the corporation tax. So The first idea which they took refuge to was to create possibilities for partnerships and to sole traderships to also split the tax burden over time. So to say, okay, you can opt for a tax which is not higher than the average tax paid by a company, as long as you store the profits within the enterprise. So as long as you retain the earnings for reinvestment. And then naturally, when you begin to distribute them, to withdraw them from the firm, then they will be treated as if they had been a dividend payment and will be taxed with the 25% flat rate. So what you might do is you might offer to sole traderships and partnerships an option for a taxation as if they were a juridical person, or to get taxed as if they were the other way around. If you are a company and you see that partnerships are better off, then you could also think about granting these people an option to opt as if they were a partnership. That depends on the legal circumstances and surroundings. In Germany, you see, the bias is in favor of the corporations. So here, an option only makes sense if you grant it to the partnerships and sole proprietors. In other states where perhaps the corporation tax is still higher, plus dividend or so, still higher than the income tax for a sole proprietor, the other way around might make sense. So to offer companies a way to be treated as if they were partnerships. Well, in cases where a state offers such an option, it automatically is possible that here you create a so-called hybrid entity. That is an entity which combines the characteristics of different legal forms in itself. For example, that would be the case if you are a German partnership and opt for being treated as a corporation under German tax law. And then if in your home state, then you are still treated as a partnership, then you would be a kind of a thing in between of the extremes, because several states would see you as a partnership and others would treat you as a company. By the way, Germany has decided to say, okay, we grant the option that a partnership can have itself treated as a corporation only for partnerships which then also in the state where the place of management is are treated as a corporation. But surprise, if there is a partnership which is active in 3 states, that does not exclude the possibility that you create a hybrid entity now, because if a partnership has, let's say, the place of management in state A, has a permanent establishment in Germany, and then also has some other permanent establishments in state B, C, and D, then Germany would say you can opt in our state for corporation tax if you also are subject to an unlimited tax liability in your state of where the place of management is, so in state A. But in states B, C, and D, it might be that it still is regarded as a partnership. So there is a certain risk of hybrid entities here. Because then by different states, the same entity would be treated under different systems, that could create a certain chaos, or that could lead to specific problems, but also to specific opportunities for tax-saving constructions. Well, we are not going to go into detail because it's complicated, and if I say it's complicated, it would also be complicated for me. Now, in Germany, which options are we going to grant? Well, you have seen here in Germany the temporary advantage is on the side of the companies, so there is only an interest of partnerships and so to opt for a taxation like a company. Here we have established different solutions in the course of time. The first one, which was introduced a long time ago already, is an option that sole traders and partnerships can still be treated as sole tradership and partnership, but can opt for a special treatment of a part or all of their profits, those profits which they decide to retain in the enterprise and reinvest. If they opt for such a treatment, a reserve is made, so a part of your equity which is reserved for certain purposes. Here, it's a part of the equity which is then designed for reinvestment. And this profit would only be taxed with a flat rate of 28.25%. And later, when this money is withdrawn from the partnership, then you would have to have a second half of the tax, and an amount of 25% would have to be paid on that fictitious dividend. So that is relatively flexible because here the sole trader or partner, each partner can opt for himself or herself, and you can use the option for parts of your annual profit differently each year. That has been regulated in paragraph 34a ESTG a long time ago already. And with regard to the profits where you use that option, you end up with a similar result as if you were a company, because the 28%, that is a kind of approximation for the tax burden which an average company would bear, because an average company would have to pay 15% corporation tax plus trade tax. And that is why they said, okay, approximately 28.25% is a good approximation for the tax burden which also a company would have to bear in the first place. And later, when you then take the money out of the firm, then you have these 25%. Now, the rule is available for partners and sole traders. It's very flexible, and the problem, however, is it has some negative aspects. First, it is extremely complicated. Imagine that you have a partnership with 3 partners, you have 3 million profit, and now each partner opts in a different way, and they opt differently each year. So you have an enormous confusion about if you take money out of the firm, who has taken out of the firm which amount from which part of the equity. You have to follow that up, and you have to avoid all mistakes. And if you have to give advice on that, you have always to find out, okay, what's better or worse for each individual partner, and so on. So this is not very well liked by the people involved. And the second thing which is combined with that is, well, even if you can opt for such a treatment of your profits, there is still one difference. The contracts between a partnership and a partner can still be not acknowledged by tax law. So even under that 34A option, if, for example, a partnership pays a rent for a house to a partner, this house will still be seen as Sonderbilanz property, and the rent paid for the house will still be seen as a part of the owner's income from business. So that's far away from perfect. Well, for example, also working for your own partnership cannot trigger wage tax and cannot bring along income from employment, because 34A is only an option which is restricted to the applicable tax rate for your income from business. Well, for that reason, Germany has recently, that is this year 2021, introduced an additional option. In the KSTG, certain entities, certain partnerships are given a right to opt for a proper taxation as if they were capital companies, so as if they were a GmbH or an AG. In that case, the fiction is wider, because if you draw that option, then even the contracts between the partnership and the partners will be treated as if they were contracts between a company and the shareholders. And that means they will be accepted under the condition, or as far as they correspond to the market conditions. They correspond to the so-called arm's length principle. I hope you remember that. So that is rather a perfect thing. Fictitiously, now your partnership is treated as if it were a company. The negative aspect, and that is why perhaps paragraph 34A has not been abolished now. The negative aspect is sole traders cannot use that option. And probably that is due to practical reasons. If you have a sole tradership, it might be difficult to determine if there are contracts between you and the firm. When you have a partnership under civil law, at least valid contracts can be made. Now, a sole trader under civil law has no possibility to make a valid contract with himself or herself. That's simply impossible. So that probably justifies to exclude sole traders from that new option regime. And another surprise, not all partnerships can opt, only commercial partnerships. So partnerships regulated by commercial law, mostly that will be the OHG and KG, so full partnership and limited partnership, and their corresponding legal forms from abroad, but especially not a simple partnership under the rules of the civil code of the BGB. So if two people together follow a common aim just by the rules of the BGB without that the commercial code applies, then they have no chance to apply for corporation tax. The other opportunity which was granted was professional partnerships. There are two legal forms, special forms of partnerships regulated by special legal rules for members of the free professions, tax advisors, doctors, and others. And they also can use that new option. Others can't. So that means in the future, certain partnerships can decide, okay, we want to become a company, but only with respect for tax law. Under civil law, we remain a partnership. By the way, then that is treated, the transformation or the change under tax law is treated as if you had really changed a partnership into a company, and that can have some enormous consequences which are regulated by the Restructuring Tax Act, the Umwandlungssteuergesetz. So nobody should ever make such an option without having in mind that it can have enormous consequences on the hidden reserves of a firm. So this is a very specific transaction to change your legal form of a company or a partnership. So it can have very drastic consequences. So one must very much be cautious with regard to such things. Because tax law really does as if you had changed to a company, and that might be regarded as having sold all your assets to a new legal entity, and might have drastic consequences. You will probably hear something about that in a lecture on the tax consequences of mergers, acquisitions, and other restructuring operations. Now, that is just a basic overview, so you know there is now the rather strange possibility that a partnership can opt to be treated as if it were a GmbH or AG under German law. The same problem can also occur in other countries, and you know, same problems is an indicator for plausibility of same or similar solutions. And indeed, you find options for corporation tax or out of corporation tax also in other countries. For example, if you have a classical corporation tax system, so full corporation tax, no mitigation of the economic double taxation, then naturally here you have the bias just to the disadvantage of corporations. If, for example, you have a small enterprise and you run it in form of a company, and then you withdraw your profits, your tax is always twice as high as the tax of your competitors who work in form of a partnership. So if you do not want to introduce a really modern corporation tax system where the double taxation is mitigated, then at least you can think about, okay, is it really fair to somebody who has a very small enterprise and has to withdraw the whole annual profit from his enterprise in order to finance his or her living? Is it really fair to do this to these people? And then you might say, we are not going to tamper with our corporation tax system, but we allow certain people, certain companies to opt for taxation as if they were a partnership. That is, for example, the situation in the US. There you have then, instead of permitting a partnership to be treated as if it were a corporation, there you have the option that a corporation can apply for, I want to be treated under tax law as if I were a partnership, or if there is only one shareholder, as if I were a sole tradership. That is famous in the US. That's the background, for example, of certain slogans which you sometimes hear, check the box procedure or check the box solution, where a US corporation can decide, do you have to see me as a partnership or as a corporation? They can just decide. But this option naturally is also in parallel to what we have seen here in the German version. It's not offered to every company. So probably the US would never offer to the Microsoft Corporation an option to have itself treated as a partnership. Why? Well, common sense. Think about Microsoft. They have thousands or millions of shareholders. Imagine you would allow them to opt for being treated as a partnership. So you would have to issue thousands and millions of tax notices to millions of shareholders. Would be unbearable. So probably one of the inbuilt limitations of such an option that a company can opt for treatment as a partnership will be that the amount of shareholders is rather limited and that you don't have a million of people in the background as partners, and so on. So that was just information on the existence of options, and on the background, which option can you suppose to show up in which kind of corporation tax system here. I hope it has become clear to you why in the US there is an option out of corporation tax to be treated as a partnership if you fulfill certain conditions, and why, on the other hand, Germany has now taken refuge to opt to offer an option to people, well, partnership can apply for being treated as a corporation. Okay, that shall be enough for this small video. Thank you for listening. Hope to see you back soon. By the way, if you want to do some sports, then that would be highly recommendable now after the lockdown times when we all got fat and lazy. So if you want to do some sports, you might take a finger, press the like button, um, so that the video creates the impression that you really enjoyed it. Yeah, and then please don't forget to memorize all these facts and to come back soon to this channel. Thanks for watching. Till next time.